well? How is the sound? Wave your hands if you can hear me. I'd appreciate that. Are you able to? We might have a few different people in the room, and fantastic. All good in Perth. There's so many people call friend. Isn't that strange? That's the beauty of what these automatic uploads. You're all called friend. So when I say friend, I don't know who you are. If you want to put your name in when you ask me a question, if you get a chance to ask me a question, I'll be grateful. So thank you all for coming along, and I appreciate the fact that it takes up your time to sit through these things, and sometimes the things I might say may not be of interest to you, but we'll get around to something that is interesting for you. So welcome to the Gold webinar. And last webinar, I was looking for this time of the year to be a buyer in gold. That was back in November. And I also mentioned that, I think, on Your Money or Call different times. So here's a disclaimer and warning. We're now in that zone where gold has been working well. We are licensed by Global Prime, and whose AFSL is 385620. And sorry about the coughing. Global Prime has made AUDUSD and Global Prime have made every reasonable effort to ensure the information provided is correct. But Global Prime makes no representation nor any warranty as to whether the information is accurate, complete, or up to date. To the extent permitted by law, Global Prime accepts no responsibility for any errors or misstatements, negligence or otherwise. Information provided may be based on assumptions of market conditions that may change without notice. Global Prime, its associates or officers or employees may also have interests in the financial products referred to in this information by acting in various roles. They may buy or sell the financial products as principal or agent, and you guys can read this faster than I can. Basically, this information is not prepared for your general specific investment objectives, financial situations, or needs. Consult a licensed investment advisor before making investment decisions. Past performance is guaranteed, no guarantee of a future performance. And there is a risk of loss of trading, and as well as the potential for profit. And what you would find is that we're going to talk about gold, which is a futures contract. It can be a CFD contract. You can also buy and sell options. These are all leverage product which magnify the risk that if you buy a gold contract and it falls to zero, you will lose a lot of money, a real lot of money, and you don't stop yourself out and you let it go. If you buy a lump of gold for $1,230 an ounce and it goes to zero, then you've only lost $1,230 US because you're not leveraged if you pay for it outright. That's an ounce of gold. If you buy shares, they may go to zero. The company may go broke. Here are the health warnings, and read your product disclosure statements before breathing. So the question tonight is, should we be buying or selling now? And I did set up some nice questions for you to do this, but I'd like you to raise your hands if this is a bit hard. I did have it all. Yeah. So how many of you are interested in gold? And how many of you are interested in Australian gold shares? Okay. And how many of you are here to learn some technical analysis? You can type it in if you wish to, that's fine. And how many are here to escape from their significant other or get out of the rain in Sydney or Melbourne or Perth or wherever it is? I got a few correct. Okay, so I'll try as being entertaining as possible. Okay. So I got an email today. I didn't know you're a fund manager in a previous life. I've done a lot in 32 years in the markets. It's now 32 years in the markets now. And I've been told it's been cold in Perth unseasonably. So he says he'll smile now when I hear you'll be critical of them in the future. And I'd be critical of them quite a bit. This, it's what happens. And caught some money on gold. Okay, so what affects gold? There's a few things that affect the price of gold. One is US dollar strength or weakness. Low interest rates in the US and money printing, the money supply, was the reason why gold was at extraordinarily high levels back in 2010, 2011. Inflation fears also drive the price of gold. Consumer demand has a little bit of an effect on the price of gold. Speculative plays have a big effect on the price of gold because hedge funds buy gold. Central banks also buy gold. These are all the big players in the gold market. So we also have central banks chipping in there. Central banks buy for all sorts of reasons, buy and sell for all sorts of reasons. And so supply is also a big important factor. The more supply you have or the less supply you have drives the price up and down in volatility. Commercial needs, because there's needs for actually different commercial products require gold. Computers require gold, I'm led to believe, although I haven't ever melted down a computer to find any gold in it. Fear. Fear is the one that the perma bulls in gold use, and they use that as an excuse for saying you should buy gold and that gold is really a currency, which it is. It's a readily acceptable currency across many countries. I'm not sure if Eskimos want to get a hold of gold. It's very hard to store on the ice, especially when it's melting. Money supply, different actions by central banks, as we say, to increase or decrease the money supply in their currencies can have an effect on the price of gold. So many things come into what could happen with gold. People say often, well, it's Indian marriage season and Chinese marriage season. And I think there's a Korean marriage season where they all get married at the same time from the photos that I've seen in Korea. So certain times of year, people get excited. They want to get married. India, I guess, is cooler to get married in November than getting married in June, July, which is a really hot time of year in India. And these are cultures that give presents for gold, that people want to wear lots of gold. And it's got a serious tradition. Whenever you meet some Indian princes, and some friends of ours are off in a wedding with an Indian prince and his soon-to-be princess at the moment, and they come back with reports that these people are just dripping in jewelry like you wouldn't believe. Beautiful diamonds, amethysts, whatever precious gem you can name, they've got in their turbans when they go to the wedding. So, and also lots of gold. So very important in traditional life. This is about me. And who's never heard of me before? Who's here just out of the blue? You just dropped in, and raise your hand if you haven't heard of me. Greg, you have heard of me. You've been a customer of mine for many years. Maybe I worded that badly. There's only one person who doesn't know who the hell I am. And basically, I come from a background of corporate treasury, corporate life, and banking. Adonis says, if they haven't heard of you, they haven't lived. Thanks, Adonis. And I started off in 1992 in, sorry, 1982. I wish it was 1992. In the Commonwealth Industrial Gases in the Treasury. And my money market was where I was ended up being. And in 1983, they floated the Australian dollar. Before that, interest rates were sexy, and then foreign exchange became fun. And one thing I agreed with Bob Hawke and Paul Keating about was the floating of the Aussie dollar. That was great fun. But prior to that, it was a dirty float. And I eventually became Deputy Treasurer, Forex Manager at Qantas. And basically, most of my life, I've been around currencies and markets. My first share investment was at the age of, I think, 20, and held those shares until they were taken away in an ugly divorce case. I was a proprietary trader at Macquarie Bank. I got to trade the bank's money and sit there and do whatever I wanted with the bank's money. That was good fun. It was even better fun when the treasurer walked into called me in and he said, "Oh, David, you're on $1 million bonus this year." I thought, wow, that's fantastic. Anyway, he said, "Now, why don't you trade larger positions? Why do you only trade $3 million face value at a time? Why don't you do 40 or 50? Because you're that good." And I went, "No, that would be destabilizing." So the greed factor is important to manage in trading, and the bank didn't understand why I had such low drawdowns with such high returns, and they thought I could do better. But Macquarie Bank, great place to work. We called it McAllery Bank. We had this beautiful treasury desk, and basically this floor, and we had, because it was a 24-hour desk, you had all the food you wanted to eat in this kitchen. So we called it McAllery Bank, or you call it Donut Bank because it's in the middle of it. And then I went on to be a fund manager, portfolio manager at Aberdeen Financial Asia, not at Aberdeen, but what became Aberdeen in Australia, and managing $4.5 billion. And so I've been able to trade billions and billions of dollars over the years, and had some pretty large positions. I've been lucky enough to trade with Larry Williams, Jake Bernstein, Russell Sands, and bring them out to Australia. Van Tharp, Glenn Neely, Ruth Barons Roosevelt, and I co-founded a few technical analyst bodies, the Australian Technical Analysts Association and the Australian Professional Technical Analysts Association. I will be talking in Newcastle on Saturday to the ATAA, and I'm currently vice president of the ATAA, of the APTA, as well as I don't have much to do with the ATAA these days, but just talk occasionally when they invite me. Let's look at gold. Sorry about all of the hoo-ha. So it is enough of me, thanks, Sri. You're quite right. Because I'm actually quite shy, I find it difficult to talk about myself. So I actually have to, it feels unnatural to talk about myself. So, so I have to actually put those things up there, because otherwise I'll slip straight into just doing market analysis all day, because that's my comfort zone, if you like. So here we go with our friends. What have we got here? This is gold. This is a chart of gold, and this is a study that I do, and it looks for, at the moment, we're saying, in terms of the stochastic on a longer term, we have gold is in a position that it would be able to go higher and a little bit higher. Now, there was a couple of big moves up that we've seen over the past. Yesterday was a big move. Last week before last was a huge move, $75. We see the commercials have been buying in and been long for quite a while, and they've been having to soak up the selling pressure, and so they've been hammering it down. We notice that it's also breaking through old lows. This is important change in trend sort of stuff. Now, you may remember me from being bearish from up here if you're at the conference in Melbourne, and you also may remember me from being bearish up on this high publicly, and I've got it on the I've got it actually on the I've actually got it on tape with me being interviewed by Michael Yorba. On the hour that it made this top, I said, this is the point to sell at. And I gave a short trade and it just went blast down. Up here, I gave that twice, tweeted it, said it's going down. We PHG trade members, we got a couple of $100 moves in this section. We got a $100 move in here. And around here, I said, I don't think we're going to get another $100 down move. Back over on this, yeah, so we're seeing here gold is in a good position. One of the great things about being Australian is the Aussie dollar is a piece of rubbish. That's one of the sad things too, isn't it, really? So gold has some of the factors, and we'll look more at the factors that I look for coming in soon. So what I want to do is I want to look at what affects the Aussie gold stocks. Australian dollar strength or weakness versus the US dollar will affect the long-term, long-run viability and profitability of Australian gold stocks. So if you get a very high Australian dollar and a high gold price, you have a very uninspiring Australian gold producer that is unhedged on the currencies, and even if he's hedged on the unhedged on the gold, they tend to balance themselves out. And we'll look at the price of gold in the Australian in the Aussie dollars and see how stable it is. So we have seen extreme Aussie dollar weakness against the US dollar. So some of these gold stocks should be, if they are unhedged against the currency, should be providing us with some bargains. Now, what I firmly believe is when you look at some of these gold stocks, or any of these gold stocks, you should look at the fundamentals. If you are looking at the fundamentals, you will see some bargains in there. We're going to be looking at technical analysis because that's what I do, even though I have an economics degree and honors and all that sort of shit. I don't look at the fundamentals. What I do is look at what's going on for gold and make some decisions that way. The gold price, obviously the gold price. If the gold price is low, then it makes it harder for Australian gold producers to make money. The cost of production, obviously, if they can produce it at high prices, then they're going to make less money. If they produce it at low prices, they're going to make more money. Interest rates, to the extent that they borrow money, higher interest rates will punish the Aussie gold stocks. It's a quite capital intensive affair. Delivery costs, how much it takes to ship, supply issues, investor animal spirits. Basically, if all of us think that gold stocks are going up and we buy them, then the gold stocks will probably have some support and go higher. So let's look at the Aussie dollar. And I'm hoping you can see this chart fairly well. And this is the Aussie US. And we notice here some salient points about the Aussie US. Now, quite plainly, I need to be clear on this. I thought up here that if the Aussie dollar could break higher, it would go towards 115, 114. The fact is, it didn't. And around about here, it got unfortunate for it, and here retested, and here. And what we see in Elliott wave terms is a fourth wave. The target is around 79.46. Now, when I was trading currencies, that 80-cent area was always important. If it can't maintain the 80-cent area, you'll see 71 cents. And it likes to do that a fair bit. It's like a vacuum. You see it try and hold that 80 cents. Here's a time it did hold. If it can't hold that 80 cents, it'll have problems, and the trend is down for the Aussie dollar. So this gives a tick for unhedged Aussie gold producers. That's a good reason to be interested in that. Here's your stock checklist. Is it a producer, explorer? Is it just random? Is it a pure gold stock? Is it hedged in its FX or gold? These are all fundamental reasons, things to tick off on the box. What is the cost of production? What is the management like? What is the mine life? What's the quality of gold? Is there any geopolitical? For example, you might look at, for example, NCM or IAU, for example, which just had the Indonesian government come in and take over. People related to the Indonesian government just come over and take over the mine. So look out for the politics of the place. Santa Barbara has problems with Solomon Islands, which we used to go to. My ex-wife used to live there, and yeah, they have a more of a tribal approach to life. So they have different pressures that they put on, and they've told Santa Barbara mines that they cannot release toxic water into the river, which is a great idea. They should have thought about it earlier. Let's get into technicals, which is my stronger suit than fundamentals, but let's have a look at the Elliott wave rule. Trends have 5 waves. Who's heard that rule? Who's heard that a good trend has 5 waves in Elliott waves terms? Okay, fantastic. So once those 5 waves are complete, in terms of up or down, we would expect a reversal of a larger scale. That's what we look for. We want to see it when it's getting complete and come to the end. Once we see 5 waves to the downside, we start to think that's interesting. Now notice here, we see 1, 2, 3, 4, 5. Even if you think it subdivides, that's a 5-wave structure to the downside, which is complete. Let's look at the yearly chart. And actually, I was going to show you something a little bit better than that, but I think that's gone by the wayside. So when you blow this up, you see how it relates. And we might see this a bit further on. This is the gold on the yearly chart. It topped over here in 2000 and I can never remember. I think it was 2010, right? So after having 1, 2, 3, 4, 5, 6, 7, 8, 9 years of higher yearly highs and higher yearly lows, it's had pretty well a 3-year correction. Now, some of my friends, some of the in the technical analysis world, Glenn Neely, believes that gold can come back down to this level. I thought it might go to 1092. I thought it might also go to 1024. That would be a nice place for it to get to. However, at the moment, when you see 3-year correction after 10 years up, you think maybe it could be forming a bigger congestion area and then maybe going higher. Now that would be just guessing, really, because all we've got to do is think about where the market's going in the long run. So the yearly highs, we can see generally, you might want to count this as wave 1. This is wave 2 of sorts, and we might have a 1, 2, 1, 2, and certainly this has 3 written all over it. And if that's 3, then this should be 4. Okay, that wave should be 4. What I want to do is to draw your attention to things going on in the US dollar index versus gold and their ratio. So what I do here is I take a ratio of gold divided by US dollar index. This is called spread trading, pairs trading, call it what you will. And this goes back to 1986 when the US dollar index started. Gold itself has been trading since Adam was a boy, but generally we look back on the futures contracts back to the 31st of December 1974 when gold futures were actually first created. And what this ratio does is it shows us that here, as this goes up, gold gets stronger. As this goes against the US dollar index, as this goes down, gold gets weaker against the US dollar index. And we can see that it had a little bit of a confusion pattern. And this is on a quarterly bar, so it avoids a lot of hoopla. But we can see during the time where suddenly all of these quantitative easing was hitting the system, in this period here, we see that the gold became important and that the US dollar was debased. And we're seeing a correction in that now. What I can tell you is if it breaks back through that really 1480 to 15 area, we'll get a bit of a correction back up to 20, and the US dollar could be weakening and gold strengthening. So we'd like to see some sort of strong correlation, basically them moving at the same time. But at the moment, there's some things we'll see in the forecast tomorrow night about the US dollar index that are putting up some really important trades, and that's for tomorrow night. Sorry, that's for Monday night, in Monday or Tuesday night in the currencies. We're doing the commodities and forex. We'll look seriously at that as what it means. So that ratio is intriguing. It's interesting because everybody wants to think that gold is a currency and that you should be trading it like gold. And the theory is that Bitcoin is the new gold because you can slice it and dice it up a lot easier. I'm not so sure that I trust Bitcoin, but there are people who want, like the Swiss referendum, they wanted to put gold back into, Swiss francs backed by gold. And last time we spoke, I said I didn't think that that they would vote for it, and even if they did, it would take 5 years to implement, which and it failed. Let's look here at the monthly chart on that gold dollar index spread, and you can see here the wave count of a 5-wave structure. And notice here we're on a wave 5 if all things well. And if it breaks back through here, we'll have wave 1, 2, 3, 4, 5. Notice the triangle here. Everybody's who's done, if you've never done a webinar here before, I did a whole lot of trading. I've done a whole lot of training on that. If you want to see that, I can send you the report, the videos of those. Let me know if you'd want a basic course in this work. Now somebody's asking about the correlation between gold and oil. We can have a look at that. There's actually a more fascinating correlation, and far more fascinating correlation that I know exists, and I'm sort of not sure we can cover that right now. But let's because it's sort of I'm sort of in my groove thing, if you'll know what I mean. We can look at that later. I'm sorry, I will cover that probably in the next forecasting webinar, gold versus oil. And there's also a really fascinating relationship that you may not have noticed previously. Anyway, let's move on. So Elliott wave rule number 4 is wave 4s retrace 38.2% on average. Now, when we look at this chart here, which was a subsection of that prior one that we saw, which was a nice summarization, you will see that this little point here when you divide it up, is a 38.2% retracement. So this would fit into the category of wave 4 on a few different scales. And we see here wave 5 coming down into this area, and basically it popped up from there, and it's popped up pretty well. And the last webinar I said buy in the second week of December for a good rally, and I thought it would be time to change. I thought it would be a safer period of time. So here we can see gold. I was looking over in December here, and we've been looking, we did the webinar over in, this was around November. We're looking for that time period to come in. So on the weekly bars, and this is getting clear and free. So gold has a few ticks on its plate, lots of ticks actually. We can see here this pattern to run into February. So trading gold futures, but bear in mind it is quite volatile. You would need a stop loss back down to as low as 1160 to clear out of this. These are big moves going in gold. Gold has bottomed for probably the next couple of months, in my opinion. Let's look at the gold GLD, GOLD in Australia, which basically tracks gold as an Aussie dollar price. And we can see here gold, this is a quarterly chart, and we can see this is an outside reversal quarter. You do not see this every day. This is important. We can see that it's held this 30 period moving average on the quarterly chart and holding it well. So at the moment, we notice that our Aussie gold price ETF for the past 4 years has really tracked between 120 and 175 on the top side, which when you think about gold, you've seen it in the same period go up to wherever this is, 1920, and come back down to 1132. A movement of some, I guess, 40 or 50%. We haven't seen that with GLD. So let's look at GOLD, and I'm sorry, I often substitute it for GLD. We can see here, we've got a target around about 157 on the top side. So this is a good one to buy with a stop loss below 132. For what reason? Well, because the Aussie dollar is weaker and because gold is going up. Simple as that. Let's look at deeper into this area here. So in general, the gold ETF has its place. We've got some volume coming in pretty well on last week. Got some more volume here. Short-term target 148. Dropping down onto the daily chart, we see it's probably a bit overdone, and I'd be hoping to buy it down around about $139 if that was possible, with a stop below 136. Now let's move on. Let's look at the wave count in XGD, which is the Australian Gold Index. Has anyone heard of not heard of the term XGD? That's the Aussie Gold Index. And in this one, Index of Gold Stocks, this machine is doing a wave count. I do wave counts in my own head, and sometimes I get the machine to do it for me. And this machine costs, it's $2,200 US, which is about, these days, about 2,700 Aussie, I would imagine. Sorry for my bad writing in AUD. And it does automatic wave counts. If you want to do this yourself or learn off it, you can do that. Now, we see here the machine believing that it's done a 5-wave complete and then an ABC to the downside, and it believes it can go down as low as 1,008 or around about 1537 area. Now, that puts us in a little bit of a bind. Now, why is that? Because if it gets back up through here, which is the 2000 area, and that's been important on my counts, if it gets above there, then it goes higher. This machine will change its mind above 2000. And I think that 2000 is pivotal area. So we want to have a look at it, what it's doing at the moment. And what we'll do is we'll have a look at what I said, what I've been saying about the gold index in the PHG trades. PHG group. Just one second. Now, what I do every day for my members is I run speed webinars, and these webinars are recorded and transcribed. And we look at, in the commodities area, we look at the commodities like gold. We look at the Australian share market, which many people are very interested in. And we have a webinar recording of it, so anybody who misses it, or if they're silver members, can watch it. So this is the ASX transcript for today, the 12th of the 10th, and we give Profit Hunter Group trades, and you can play this on the website if you wish to. And we talk about the markets. I'll get rid of that. You don't want to see that. And we talk about what the XAO and All Ordinaries and XJO do. I put up charts and people can read it. So if you want to watch the video, you can do so. If you want to scan through and search for words, so for example, you go Control F and look for XGD. Sorry, straight XGD. It comes up with the gold index, and I'll say things like that. That now that the Australian market with a lower Australian dollar, and this is a transcription, it actually gets edited for the Australian shares report, and it's saying here the ETF, the US gold market vectors did not do as well as gold did. And this is a raw transcript, and it gets edited, so that will have changed. So should be a beneficiary of a better rally than the GDX. So on a break above 1930, we'd expect up a run up to around about 1981. Indicators a little bit touch and go, and it's not at the end of this week, till the end of this week, that we expect it to start to get some more strength. Notice the seasonal string was pretty well bang on with that low, and the next time to safely buy is around the 11th and 12th of December. So the Profit Hunter Group members got that, what you're getting tonight, really today. So we also had a look at, I asked people to give me a choice of their gold stocks during those webinars. And the gold Profit Hunter Group gold members asked me about RRL, Regis Resources, which was a stock that we bought down here, actually really at a really good level. This is on the monthly charts. And then we thought this is a good buy and a break above $1.63, which it did today. Stop loss below $1.32. And we're hoping for $2 on the top side with RRL, Regis Resources. So basically, if you're ever interested in working out where a stock or an index should go, this is a good way of looking or hunting them down. So the gold index, again, 2000. Clearing above 2000 is important. More joy would be above 2100. We do see this is possibly going to 2115 and more likely 2310 on a break above 2080. So do we have any questions about that analysis that I just gave you? At the moment, the Australian index, it's been confused, it's been big. What I have to do is I have to tell you the stop loss is around the 1800 area if you're trying to work with the index. Okay, so there are no questions. Fantastic. Or have I lost the questions box? Let's see if I can get it back. No, there are no questions. Okay. I didn't ask about specific. Yeah. Okay. Can XGD be traded as a CFD? Martin has asked. It's possible. However, I believe you would have a very big spread. When they used to, one of the CFD brokers used to trade, allow you to trade XMJ materials index. There was a very large spread between them. So we'll talk about individual stocks a little bit later. I wanted to go through the overall indices and the markets here. What is interesting is that it's not trending up. We had some divergence. So generally in this case, we could see this is complete, but it needs to be guaranteed above 2070. Peter is asking, could this be a long basing? Yes, it could be. Now, I am going to go to a direct stock, which makes a big difference to the Australian market, and that is, of course, called our friend NCM. Now, NCM has its problems, and maybe it will be better if I can pull up an NCM chart. What you can see here is something that we've been tracking for quite some time with NCM. It's in this big triangle. XGD, are the options liquid? Is that a question or a statement? So we can see this big triangle. What I can say is if you get a break above the top of this triangle, you can buy it looking for, where is this here? And apologies, this is above this $12, you'd be looking for 1575 on Newcrest, and it tends to drive the index. What I am surprised at is that today, where are we going? Today, Newcrest didn't rally it by as much as I would have thought, as you can see here. Now, we've been positive on Newcrest in a few ways, but 1575, 1172 are important targets. If it breaks $12, expect that $15.75. So a lot of the move at the moment has been run its course, and the way that Newcrest has been trading has been triangular, which means you buy it at the bottom and you sell it at the top. You buy it when it looks terrible and you sell it when it's looking great. And so we can see this pattern a little bit more clearly when I put a line chart on it. And there's the 1575 target. So I do think above $12 is the best idea to buy if you're thinking of longer term, or above 1155. At the moment, there's no conclusive proof that NCM is a buy. It's got its own issues. Now, we'll move on. So there will be a time where I will call for specific stock questions. If you can, what I do is I focus on the person's question straight away. If a question pops up, I go to answering my question. That makes me, how would you say, not very good for television, because I'm not creating my own agenda. You know, other people are really good at creating their own agendas on the television. I'm not, fortunately, so they don't like me on. So these are gold stocks which are probably ending at a downtrend on a longer term basis. The All Ordinaries in gold, AMI, that's a little stock, BDR, EVN, King Rose, OZL, Saracen, forget about OZL, SGZ, which I'm not sure, this is a scan that I do, SLR and TRY. Now, I am always nervous about SLR. I'm going to have a look at that right now because I'd like to see if it's good, bad, or indifferent. And this is still bad. It's still got a problem, and it still might go to 8 cents. It needs to get above 35 cents for me to get that interested in it. I can see it trying to bottom on the daily charts, and there appears to be some volume coming into it, but there's just something. The only thing I would do is, if you're thinking about SLR, is to have a stop at 22 cents. Let's look at SAR, which is Saracen. Some people I advise Saracen, and Saracen management. And we can see it coming back down into this zone, which is okay. I believe Saracen have been quite hedged. Now, this is the trick. If you can find one of these gold companies which is hedged and has a lot of profit in the hedge, who are unwinding the hedge, you will get a double whammy, because they'll take profit on the hedge, and then as gold rallies, they will be exposed to the full impact of the gold price rally. Now, I don't know whether Saracen management will reach that decision. I can't read that, but I do know they had been hedged. And so if they unwind, this might be interesting for at least 62 cents on the top side. If you were thinking about trying to get into Saracen, it's certainly stronger than something like SLR. You might want to buy it with a stop loss below about 17 cents and hold on and hope for that 62-cent area as a dream target. At the moment, like NCM, it's confused. At the moment, it's got a sign that it could rally to 28 cents. That would be no drama. What I would say is, if it breaks 30 cents, it starts to get clear. So if you are buying this, have your stop loss at 22 cents. It's okay to buy. Volume has been good this week so far, with only 3 days up its sleeve. Stop can be at 22 cents. You're pretty well targeting 28 cents on Saracen. Now, what we see here is some volume going in, and that 28 cents is a confirmation. If you wish to have a tighter stop loss, you can have it at 23 cents and cross your fingers for 30 cents. So Saracen, maybe they do the unwind. There's Troy Resources. Let's have a squeeze at Troy Resources. And first off, we'll look at it on a yearly chart, if we may. There's probably not enough data on this. Actually, not too bad. On a quarterly chart, we see Troy Resources just getting into, we see Troy Resources hasn't had a really good wake-up call yet. We'll look at it on this data, because sometimes that other data, it's gone up to 44 cents, and the low itself was 42 cents. Its life has not been that good. It's something you probably don't want to get interested in until it gets above 75 cents at this point. And on the medium term, you could wait till it gets through 50 cents and then maybe buy it with a stop below 44 cents, hoping for 75 cents or even 84 cents. So Troy, some things not quite right about it. Just make sure you have a stop loss. You could have a stop loss below 43 cents, stop close only. Is that it? Yeah, no, maybe 42 cents, stop close only. Okay, as I said before, we're going SGZ. I haven't heard of this stock particularly much as a Scott Gold. This is forming a bit of a basing formation, which is a nice thing to see. It probably doesn't trade that much. It's more fly specs. Yes, it is. It is fly specs. This is high spec. I would leave that alone, even though if you are buying it, stop below 0.5 cent and hope for around this 1.1 cent area. Now here are some stocks that are ending wave 5 of 3. Now what do I mean by that? If you've got a 5-wave structure to the downside, a little bit more that we teach in the advanced class, 5-wave structures, a wave 3 consists of a 5-wave structure. So the strongest wave in any move in a trend is the wave 3, and wave 3s tend to have a 5-wave structure in them. And this may be, in these stocks here that we've pointed out, they may have more to go on the downside, particularly NCM and Saracen and SLR and Troy Resources. Now, we've looked at AMI, I believe. We'll have a quick look at AMI. That's not coming up on my little scan there, so we'll have a look at on here. AMI. And we can see AMI is down into a bit of support. And you might think about buying this on a break above, really above that 27 cents area and a stop below 24 cents. It has done a few things that I like. And you might even have a stop below 20 cents if you're thinking about this one. Okay, and what we see now is a downtrend broken. This is of interest, this one. I'd be looking for it to get towards 31 cents. Stop loss below 20 cents. I like the fact that it's come back down into where it was floated, and it's got a real test. This is in the little bargain hunt area. Dropping down into the daily charts, Aurelia, 28 cents target. A little bit sloppy on the daily, but there's some, yeah, I still think you might have that 31 cents with a bit of improvement in the price of gold. Okay, let's move on to the next ones of my agenda. We'll see, we want to have a look at, we've looked at that, and slightly of interest. We'll have a look at BDR, because that's, actually, no, we'll keep going with this one. We see gold stocks in 4th waves. And we remember when we said these XGD may be in a 3rd wave with a 4th wave to come. That's XGD and GDX. GDX is the US ETF of gold market vectors, explorers, and SGZ, which we have seen. So let's look at GDX. I want to have a look at the US stocks as well, because remember I said that I didn't think they would be that flash. GDX has a double bottom to achieve at $15.83. quite often you will see it magnetized, attracted down to 1583. It's just churning before another dip. So gold market vectors usually not so good. So here we have a question with notice. And what I do like people is to ask questions with notice so I have time to pick them up. So thank you for that question, Richard, on NST. He put that on Facebook and asked me the question. So I appreciate when people do that, because otherwise I don't know what I'm targeting for. So NST, we can see it's had a very excitable life. And we notice here that we have a 1, 2, 3, possibly 4, 5 pattern. And guess what? If you call that an extended fifth wave, it's not. It's not likely to be, because it's just been fully retraced. NST has a problem. And the problem is, I would suspect it's that everybody loves it, and it's probably hedged, and they'll probably stay hedged from what I can see. $1.53 to $1.58 is the zone that we should expect it to get to. My problem with this is I would rather be buying it above $1.60, hoping for $2.29, than buying it in the next 10 cents higher. Where you would like to buy dips eventually would be 73 cents in NST. And you can see the current rally is decreasing. Look, the size of the volume is very high. NST is very suspicious in my mind. I am going to phone a friend, and we will do an Elliott wave count in this with the machine. And the machine may tell me something different, but at the moment I will go with what I think. NST, and so many people have been asking me about NST. I have a feeling. Hands up who owns NST right now. Okay. Now, the people who've been urgent to ask me about NST are generally the people who actually own it. And about 10% of the room own NST. This is a sign that you probably... Anybody who calls them, who've got their name down as friend, could you please change your name so I don't just call you friend? You can do that in the little box on the side. There's a little thing where you can put in your name. That would be easier than calling your friend. So about 10% of the people here own NST, and I would think that there's probably too much love in the room for NST. So best bet I can tell you is up to 153, down to 73, a bit of ping pong. I can see about 3 people just left the room in disgust. So sorry about that. Let's do the wave count. Hopefully we can pick this up again. And it take a while. Who has sold out of NST in the past 6 months? Had it, but sold out. Okay. Another 10% in the room. So the best thing I can do to say to help you in this case is to say on NST, your stop loss, it's the first thing you should think of. Stop loss should be below $1. I did like it down here, but I'm concerned that it's not just got that too much love. Stop loss below $1 if you are holding for the longer term. Just you might of it, but okay. Notice here we see here on NST the machine is saying this was a 4th wave, this is a 5th wave, that was the 5th of the 5th, and machine is confirming what I thought. So In a washout, 63 cents. In a major catastrophe, 40 cents on the downside. I'm not sure if that's going to happen, but it believes it's long. The machine believes its long-term cycle is down, and stop in its case would be below $1.12. Apologies to anybody who owns NST. That's so let's move on. In case when I've already covered how high it would have to go. It would have to go through $1.60, if you remember what I was saying. So here's a shopping list from Profit Hunter Group members. As you can see, the questions with notice, we're going to look at BDR. We've looked at NST so far. We looked at RRL. We've looked at GDX. This is a Profit Hunter Group member, and he has asked for EVN, and we haven't got to KRM either. KRM at the moment, again, it's a little bit of a failure. So the best I would think it can get to, as you can see here, there's a bit of a five-wave structure with a little bit of a failure. Could get back up to $1.08 on this, maybe 95 cents. So I'm okay with you buying EVN, and your stop loss can be below 49 cents, stop close only. Let's drop down onto the daily, see what's what. We see some okay volume, short-term target towards 64 cents, 61 cents. Stop loss if buying would be at 52 cents. So EVN, it gets a little bit of a tick there. KRM, and of course you should check the fundamentals of these little puppies as well. Look up your stock doctor or talk to your broker about, actually, yeah, don't talk to your broker about what, if you want to buy it, because they'll probably tell you, no, don't buy a gold stock. Actually, if your broker tells you, no, don't buy a gold stock, and he's not a Profit Hunter Group member, because quite a few brokers are, then you look to buy it. Now, King Rose needs to clear through 29 cents, really, at the moment, to get out of jail. At the moment, you could think this is a fourth wave, but the volume on the downside is a little bit disturbing. So let's drop into, so if it breaks 30 cents, then we'll be looking to 62 cents. On the weekly charts, we see you need a stop if you're buying. It hasn't survived well this week so far. Hasn't cleaned out. Volume okay. Again, I think it needs a break above 30 cents to buy this, with a stop below 25 cents if you get interested in that. OGC, which has been one of our favorite trading stocks in PHG. We've had some fantastic runs in OGC. It's one of our preferred ones. Now, you can see OGC has had a better life. It has visited its old base, and it's hanging around in the middle here. It's had an okay month last month and an inside month this month. And OGC, you could think of it as a longer term range play with a target towards $4.12. And stop loss below $1.75. Notice there's a five-wave structure in the upside. It's come back in a nice retracement. It hasn't violated really the old lows. So something certainly to look at in terms of OGC. Where would I buy OGC? Really on a break above $2.32. And a stop loss below $2, hoping for $2.92 to around about $3.15. So OGC, not bad. We'll go back to BDR. Beetle. Now, Beetle is really a piece of shit, really, isn't it? Volume is very heavy against it. It would really need to get above 25 cents. If it did that, then expect 40 cents. Now, Beetle suffers from too much love. It's certainly up at $1. There were so many people in love with it, and I would imagine who's been holding Beetle Resources for the past 2 years? Who's not prepared to admit that they've been holding for the past 2 years and have not got out? Come on, I know there's more of you in the room. Okay, a lot of people up there. The trend is down. It's not a safe one. It's a bit fits into the SLR category. So many people loved it. Everyone wanted it. And Greg said, I mean, no, it's just the way people work. This is Beetle. This is where Beetle was. And this is where most people bought, probably between 80 and $1. And it hasn't yet changed. So I'm not even going to bother looking at this chart here. It's still got a little bit of negativity to it, and you might get excited above 25 cents. GOR. Now we are running out of time, and yeah, for those people who have had questions, I'm sorry I can't answer all the questions that you have, obviously in just an hour. I can only really go with the questions that I've been asked on from with notice, and so here we have coming back into here. Not bad, Gold Road, not bad. I think this is certainly one of the stronger ones. I want to see a break above 27 cents, and really the 16.5 cents would be a stop loss if you're buying this. So I don't mind Gold Road. Hoping for 53 to 56 cents. At the moment, a little bit of a descending triangle, so you can have your stop loss at 20 cents if you are buying this on a break above 24 cents. Dropping down on the dailies, we see some good volume. So this isn't bad. Stop below 18 cents or 19 cents on a stop close only basis, and hoping for 25 cents and then 30 cents. So not bad. So we've done Gold Road. It's okay. HIG. So for the next goal webinar, make sure you drop the questions up on the AUDUSD Facebook page, and do it in advance if you want the gold stocks you're interested in covered. And I am running out of time. My wife gets irritated me doing these late night webinars. Or the other alternative is become a Profit Owner Group member, and then you can ask me questions all the time. No matter what you do, you can come in and you can ask me about whatever stock you're interested in. We have, where do we have? Let's look at the post today. So these are oil. We looked at that. We looked at Crown. This is Crown. We've had a short on Crown for quite a while, and it's said Crown long. David, it's coming up to your buy target. This is from a Profit Owner Group member. I say yes, it is. And cycle timing is also good this week. So we've had on our PHG trades. Let's just go and have a look at our PHG trades. Where are we? We also keep a video for the PHG trades, which is up there today. And we have Crown. I'll just expand this so you can read it a bit better. So Crown, we just took profit on CSL. We bought the break up above $80.40 and bought at $80 and got $5 out of it, basically. The short we had on Crown was from $14.38. We've had quite a few shorts on Crown. Stop loss has been moved to $13.65. EPW and Crown here is, we've had this order in the books for a long time. You probably saw me on Sky saying to buy about 6 months ago, down to $12.86 to $13.05. So we've been hanging in there for most of the time, bearish on it, but we're coming up for a big one. EPW has been a beauty. Has anyone been trading EPW? That's just such a joy to trade. We bought dips to $1.67 and $1.82. We've just been raising the stop up every day, and it's $1.93 there. And yeah, that's pretty cool. Leighton's has been a nice trade. A lot of people sold Leighton's after the Victorian government changed, and people asked me, and I said, no, it's a buy, because, you know, who cares? It's a minor job project on the East-West link for Leighton's. It's not the whole story. And besides which, most politicians have grand ideas when they come in, like Barack Obama, that he'll change the world. In the end, he just ended up looking like a black George Bush. So Highlands Gold doing the same thing, killing the bad guys, shooting them up, same deal. They get control of guns and they enjoy that sort of stuff, or whoever they define as bad guys. Highland Gold, interesting. Certainly very interesting, above 7.1 cents, and a stop loss below 4.1 cent if you're getting in on this on longer trade. So probably, I think this is got the potential for a longer base, as somebody asked, but there's some good volume going into this. Highlands is highly of interest, with a possibility of 21 cents, which would be a good move. How can we get into Highlands is the next question. We've seen it drop off. Certainly on a medium-term basis, we see a break above 6.4 cents, stop loss below 5.4 cents. Yep, so basically Highlands, good stuff, but needs a break up. And it may form a bit longer of a base. Okay, so Highlands, break above. Okay. MML, this is taking a while. By the way, anybody interested in PHG Profit Owner Group membership, give me a call on Friday and to mention that you're at the event tonight, and we can discuss whether you would qualify as a Profit Owner Group member. We do an interview process for that. Now, we see double bottom, good stuff. Good stuff. Complete. So we get a few ticks on this. Above 94 cents is a good thing. So above 94 cents, long term. We see 1.3 cents, $1.30, sorry. Yeah, Medusa's got some good ticks, very good ticks. Looking for 1.1 cents, sorry, $1.10 or 90 cents on the in the shorter term. This has got some good things. Stop loss if buying around the 67 cents. So I like that. PRU, and I think we're going to have to do it at that. I'll answer Kevin's questions in the PHG work. PRU, you have to not get too excited about it. It's another one that is a fallen angel, and it's not surviving that well. Probably comes down to about 20 cents. You might look at it down there. So no on that, and we're going to have to leave it at that. Now, is anybody here a do-it-yourself investor? Do you run your own self-managed super fund? Okay. And are you a long-term investor or a shorter-term investor? Medium-term, long-term? Okay, cool. So what I'm going to, for those people who are that style of investor, the Australian Shares Report, and what it does, see if I can bring this across here. Okay. And what it does is it goes through a lot of the indices that we have in the markets, and it goes through National Australia Bank, and it goes through it on a long-term and intermediate term basis. So here I'm saying on Westpac, I don't like a break below $32. Now this comes out for investors' time frame, which is monthly charts and quarterly charts, and intermediate time frame, which is weekly. So this is not for traders. If you are an investor and you want to keep a track of your stocks every Monday, Wednesday, and Friday, and the major indices and what's happening there, then the Australian Shares Report, which is $997 for an annual membership. At the moment, I have a special for you, for the people who are here, to get 13 months for the price of 12. So that's effectively about a $80 saving. And if you have that interest, what I can do is send this off to you, and that link will be available. So you can have 12 for the price of one over Christmas. It would be useful to have a look at this, work it out, and pick up some trades and some biases so that you're actually not running long BHP when you shouldn't be. Now, I've had to repair quite a few people who have been long BHP shares under options. I've just had a phone call just 10 minutes before this we started, of somebody screaming and crying that they're actually long BHP because of their options and what their brokers did to them in the options. Another one. So I'm going to have to save another person and get them out of the problem with BHP. I do that on a consulting basis, and one of my clients, he had $20 million on margin loans, and he's been very happy because I got him back down to $3 million exposure to the market before the market collapsed, and we got him out of a lot. He would have lost probably about $3 or $4 million if he had have kept in there. So saved him about $3 million, I reckon, and that was pretty cheap for the 20,000 fee that I charged him. So yeah, Bernie will be doing that tomorrow night in the forecasting webinar covering BHP. So if you want to join that, just go to the website and pick that up. So here we see we're stuck in Pru trending down, even on the weeklies. Leave it alone. Okay, that's it for the night. I hope you've had a good one. If you've had a bit of experience in the markets, then gold membership of the Profit Owner Group would be interesting for you, and you can call me on Friday about that. If you have had, and you want to be, if you want to be get all of the information of the gold members, you can join at any time at profithunters.com.au as a silver member. There's no with no interview process and screening process for silver members. You can join that straight away, and give me a call on Friday if you've got an interest. Okay, cheers everybody, have a good night. And I didn't get to my conclusions. That's what happens. These are some interesting. So basically, I think you should be buying, but not necessarily now. It's okay to buy gold itself. We'll give that into PHG trades tomorrow morning, how we get into gold. And it's okay to buy unsold, forward or unhedged gold stocks with good cost of production. It's a bonus if they are got hedges and they're unwinding. Thank you all very much for coming along. And I hope have you gotten anything out of this? Thanks, Robert. Great. Okay. Well, and thank you. I appreciate you coming along tonight. And I'll probably see you look forward to seeing you in another webinar. Cheers, everybody. Have a good one. PHG members, I need to show this for Profit Owner Group members, that when you, I'd like to do this now, actually. It's probably a great idea to do. When you go into the website, I just want to highlight to you where you would log into on the right-hand side. And forgive me for the non-PHG members, but make sure you're logged in here. And when you're logged in here, you'll see up here that you can get the gold analysis video, blah, blah, blah. You can book in for the shares forecasts. If you're a non-member, that link will appear live. If you're an ASX video newsletter, you can log in and look for next events and go to the ASX video newsletters. You can also go to the recording of your latest events. This tonight will be under this button here, latest educational event. The shares forecast for tomorrow night, there's a link here for PHG members. For non-members, you can go across here to the front page and order using this button here, get your stock market forecast now. There is a recording available. If you are a bronze member, your focus comes in and you'll see forecast registration up here, forecast Forex, all those sort of things. You can register for the Forex webinars, the video recording. You can register for the international indices individually. You can also register for the training that will change tonight. And we can go to the Forex speed webinars that we have tomorrow morning at 8 o'clock, and commodities. Click on there to register. And you'll see when you click on this button here that you'll get a choice of webinars if it's on a Monday and Tuesday, and then you put in your name and you put in David and you put in your email address, and then it will come across and it'll pick you up. Click into register now. It'll take you across and it'll get you to wait in there for the webinar. So it's a fast way of getting in and around. It's a very good way to get into the webinars. Thanks, everybody. Have a great night. Appreciate your attending. Cheers.